What's up, guys? Welcome back to DCA. So what we're going to do in today's video is take a look at one of my favorite metrics for analyzing the crypto market. So I think of this metric as being like a cheat code. If you had this metric in the stock market, every single trader would be using it. But because a lot of people doing TA in the crypto market come from the stock market, they aren't comfortable with metrics like this. They're not familiar with metrics like this, so they don't use them. This metric is oftentimes what you're trying to do when you're using TA. So because we have the ledger, the open ledger for Bitcoin, we're able to see where the majority of holders are positioned at any given point in time. So let's pretend that this were the stock market. Imagine if you had a metric which would show you where a hedge fund purchased a huge amount of an asset. As you're moving down to that hedge fund's price, you can be pretty confident that you're going to hit a support level there, right? Because you're going to essentially arrive at a supply shock at a particular level. This metric is doing that for us. It's giving that type of insight in the crypto market. And the only reason you don't see this metric used more often is A, because it's somewhat difficult to get access to it. B, that a lot of people simply don't know how to use it or don't understand it or have never even seen it before. So this metric is somewhat similar to the visible range volume profile or volume profile visible range. But whereas that's giving us an estimation of where people may be holding the asset or where there may be a fair value zone, this metric is giving you specific locations where individuals hold Bitcoin, okay? So we can break this down by the age at which they've been holding the asset. And that's important because we know, and this is, confirmed statistically, we know that someone who's been holding the asset for about 6 months or so is much less likely to sell at any given point in time. So we have this 0 to 1 days, 1 day to 1 week, 1 week to 3 months, and we can just remove these because these guys tend to be forming a large volume every single day. So wherever your price is at, you're going to see these day traders, these swing traders, making up the largest part of any given point in time's volume. So right now we're sitting at 45K, and you'll see that all of this volume is going to be positioned right in that area, right? Because we've just recently been a bit lower down here at around 40K. You have all of these holders right there, but they're going to come and go at every single price level. Okay, so these guys tend to not factor in that much into your support and resistance levels. We can also remove the 1 to 3 months guys and the 3 months to 140 days. So all of those guys are considered short-term holders. And it's very likely that small price fluctuations, you're going to see a lot of those guys sell. Now, obviously, in order to become a long-term holder, you have to start at these levels. But unless there's something that just hops off the charts, like when we saw something happen down here at 17K that I've made numerous videos about, when we were at 17K, I started making videos saying that, hey, it's very likely that that could have been a major institutional event that we just saw, because on this short-term holder level, we saw a massive number of Bitcoin were purchased at 17K. And so this level that you see down here, it's not coincidental then that that's where the bottom formed, because you had all of this Bitcoin buying that happened down at this level. And so up on this top axis here, you can actually see how many Bitcoin are held. Okay, so for instance, there's around 600,000 Bitcoin are being held at that 17K level. All right, here we have the price, and then down here is just the standard date. So at any given price, you can see how many Bitcoin are actually held at that level. What's interesting here, if we just bring this out, so we're just looking at long-term holders. And the reason that we're looking at these guys is because of the fact that as we're coming from lower levels up to these large quantities of holders, you tend to see that it's likely you'll hit a resistance level there. As you're dropping down to these long-term holders' price or their cost basis, you'll tend to see that you form support at that level. Okay, so another interesting thing happens. Notice these areas where we just simply don't have a lot of volume. So we're talking like right here, 46K all the way down to around 40K, right? You just don't have a lot of volume in that zone. Not a lot of people hold Bitcoin there. Another level like that, interestingly, is this level right here, 38.5 down to around right here at around 30K. And so this is another thing, if you're new to the channel, you wouldn't have seen this before, but and anyone who's watched my channel can attest to this. I've said so many times that once we break above this 31, 32K level, the second that we finally break above it, you're just going to shoot through 30K right to 40K. And sure enough, in a matter of a month, we went up $10,000. And that's because of the fact that you'll see there is not a lot of volume there. So these are called low volume nodes, or, to steal a term from the visible range volume profile, it's like a low volume node. In other words, there's just not much there. So when you get into these lower volume zones, you tend to shoot right through those levels. Now notice what's happened since we've got up to this 41K level. Not much volume above us. And that's why we have just shot right through, straight from 40K all the way up to 44K. And if you look at this here, there's not a lot of volume until you get up to right around here, at around 48K. So we don't hit another big block of volume until 47, 48, 49K. And then even after that, after you get past this 49K level, again, you really don't have much here all the way until you get to around 57K. And now we know how the crypto market is, right? It's not just about, holders necessarily, because at the end of the day, there's going to be these psychological levels. Like when we get to back to the all-time high, even though there's not a lot of volume there, we'll likely hit some resistance right there, right? Just because people will be taking profits. It's a milestone, like every 50K, 60K, 70K, those kind of things. They tend to just be natural resistance zones, but they tend to not be significant. So if we do get back up to this 69K, yeah, we might get bounced, but we're probably within a day or a week or whatever, a couple weeks, you'll be shooting right past it because there's just simply no resistance there. So what we're seeing right now is, as we're sitting here at around 44K, it's clear skies ahead all the way up to around 48, 49, 50K. But if we do get bounced, it's good to know this chart because then we'll know where our support levels are going to be. So our first support level is going to be right here at 40K. So if we do get bounced off of here, this is an area where I'm looking for support. Now, if we lose that, then very quickly you could find us back down here at 30K. And this is what I talked about in our last video, that I am expecting that there's going to be a rather large correction. If you look back at all the prior market cycles, when you get into the bull side of the market, there tends to be large corrections because you need to shake out who? These guys here, right? Your people that are coming in, swing trading, trying to make a quick buck. So, I think what you're going to tend to see is, I don't anticipate us just, shooting right through 50K, going up to 60K. Now, it very well could happen because, as you can see here, there's not a lot above us to kind of impede us from going up to those prices. But if we do have some nice support zones below us at 40K and then at 30K. After that, then you're looking at, back down here to 24, 25K again. So it's just taking the entire picture of what's happening on the network and understanding where your various support and resistance levels are going to be. So here we have pretty much the entire distribution of holders of Bitcoin, right? So we go all the way from 0 to 500, all the way up here to 65K plus. And above 65K, there's a negligible number of coins. So you'll see that where we're sitting right now, there's about 770,000 coins. And above us at that 45 to 50K zone, then you have another around 600 to 700,000 coins. Above that, there's just not much. And so a very quick and dirty way to look at where your support and resistance zones may form at is by looking at this. So you can just see here that at 35 to 40K, we have 1.85 million coins. And so as you're coming back down to that level, long-term holders are less likely to sell. We know that, especially as you're coming down to their cost basis. So they tend to form areas of support. Likewise, down here at 25 to 30K, that's where we have 3 million coins. So you just have a huge number of coins there. So to sum it all up, where we're sitting right now, at around 44K, it's pretty clear all the way until you get up to around 50K or so, right? That 48 to 50K zone. Below that, we have some support at 40K and then a huge amount of support at around 30K. I think that if you're looking for a spot to, try and pick up Bitcoin, if we did have a correction, these are good areas to look at. I know a lot of people, maybe missed investing in the bear market because they were sold on a recession narrative. And so I think a lot of people weren't necessarily dollar cost averaging into the market, or, maybe they've just recently FOMO'd. So if you're trying to kind of correct what you've done so far throughout the bear market, and you're looking for logical and reasonable places to try to enter the market, this isn't financial advice, but, just based on the data, I think the 35 to 40K zone, and then again at that 25 to 30K zone, if we did have that type of correction. Now, obviously, you're not guaranteed that. You're not guaranteed that we have a correction like that. So, I wouldn't necessarily bank on the fact that we're going back down to 30K, for instance, but it's completely within the realm of possibility that we do. I mean, just look back to the 2018 up to the 2021 bull market. So you had a price run here in 2019, the beginning of 2019, where we went from 3,200 all the way up to around 13,000. And then we crashed all the way back down to around 5K, right? A closing price of around 5K. So just because things are looking good right now doesn't mean there can't be another large correction. So it's better to not be deterministic one way or the other and just to say that, this has to happen like this because of XYZ. That's the nature of financial markets. They tend to play out in a way that, you're very likely not expecting. So this is the thing I'm looking at right now, guys. I think it's very likely that we could see ourselves shoot higher from there, but then we may hit resistance at that 50K zone. Then I'm looking for support down here a bit lower at around 40K. And then if we lose that, I would expect us to, shoot down into this low volume node all the way down to 30K and hoping for support there. So, we're not trying to predict the market. We're trying to understand the market. I think that's, the one of the key elements that I've found to being a successful investor. It's understanding what's happening and not trying to necessarily predict what's happening. So that's going to be it for this one, guys. Until next time, as usual, see you.